U.S. economy shrinking 0.3% in the first quarter, significantly weaker than expected, a dramatic turnaround from the fourth quarter of last year, and all of that ahead of the tariff announcement.
Says President Trump's threat of tariffs is really weighing heavily on the company. Already, the automaker cut its earnings forecast this year by $1.5 billion and suspended its earnings guidance because of the uncertainty related to the tariffs and President Trump's big, beautiful tax bill.
The United States economy is teetering, and Ford Motor Company is caught in a tariff tsunami. President Donald Trump's 25% tariff on imported light-duty vehicles is crushing America's iconic automaker, slashing its earnings forecast by $1.5 billion and forcing price hikes on 3 Mexico-built models. China's brutal 145% retaliatory tariff has halted Ford's exports, gutting its global strategy. This isn't just a corporate crisis. It's a seismic clash threatening electric vehicles and climate goals. Smash that like button to dominate the YouTube algorithm. The United States economy shrank 0.3% in the first quarter of 2025, far weaker than expected, a stark reversal from last year's growth. Trump's tariff threats are piling pressure on Ford, which axed its $7 billion to $8.5 billion profit forecast. Net income plummeted to $473 million, down 65% from $1.3 billion a year ago. Revenue dropped 5% to $46 billion, and Ford's stock fell over 2% in after-hours trading. Markets are screaming uncertainty. Ford's not alone. General Motors is reeling too, scrapping its 2025 earnings forecast and halting a $4 billion stock buyback. Both automakers can't trust their economic models anymore, blindsided by Trump's economic nationalism. 25% tariff aims to revive United States manufacturing, but it's wreaking havoc on global supply chains. Ford's raising prices on Mexico-made vehicles to offset import costs, while China's 145% tariff has killed exports, costing Ford critical international sales. If you're stunned, hit that subscribe button to stay locked in. The fallout is brutal. Ford's operations in Mexico and Canada, tightly woven into United States production, face chaos. In Ingersoll, Ontario, General Motors workers were warned to brace for production stoppages within weeks. Union Chair Mike Vanacle said tariffs could halt operations in days, threatening thousands of jobs. Canadian plants in Windsor and Etobicoke are still running but teeter on the edge. The Canadian Vehicle Manufacturers Association, representing Ford, General Motors, and Stellantis, begged policymakers to honor the United States, Mexico-Canada agreement to save North America's auto economy. Labor is splitting apart. Canadian unions slam the tariffs, fearing job losses, while the United Auto Workers in the United States cheers them. Union President Shawn Fain called the policy a fix for decades of United States factory closures, citing shuttered plants in Lordstown, Ohio. But he ignored Canadian workers, exposing a rift in labor unity. Once allies, United States and Canadian unions now clash over national policies, as tariffs pit jobs in one country against another in a zero-sum game. The electric vehicle revolution is at risk, a twist no one's talking about. Ford and General Motors bank on electric platforms, but tariffs threaten critical components like batteries and chips, mostly sourced from Asia. China's 145% tariff and potential United States trade barriers could spike costs, delay launches, and slow consumer adoption. A one-year delay in North American electric vehicle production could keep millions of gas-powered cars on roads, derailing climate targets and green energy plans. Supply chains are crumbling. Suppliers in Canada and Mexico, vital for electric vehicle parts, are stalling investments and cutting output forecasts due to tariff uncertainty. Battery plant plans are on hold and private charging infrastructure projects are slowing. Federal electric vehicle incentives tied to affordability are losing impact as prices climb. This risks a luxury-only electric vehicle market, leaving middle-income buyers stuck with gas cars, widening the gap between climate goals and reality. Trump's tariffs aim to protect United States jobs, but they are backfiring. Modern auto manufacturing spans dozens of countries, with parts crisscrossing borders. Reversing globalization demands massive resources, and Stellantis is already shifting truck production from Mexico to the United States to dodge penalties. But retooling supply chains is costly and slow. Ford admits it'll take years. Investors are spooked, with auto stocks tanking and Canadian and Mexican suppliers projecting losses through 2025's third quarter. The economic nationalism push is unraveling decades of integration. The United States Mexico-Canada agreement, meant to stabilize trade, is under strain as tariffs upend assumptions. Canada's auto sector, dependent on United States markets, faces sudden disruptions. Toyota and Honda report no immediate changes, but warn of a fluid situation. General Motors delayed investor calls to reassess, signaling industry-wide panic as trade policies rewrite the rules overnight. This isn't just about cars, it's about the future. Ford's $1.5 billion profit hit reflects a broader clash between global business and national priorities. As Washington pushes industrial autonomy, companies like Ford are trapped, raising prices and losing markets. The unintended electric vehicle crisis could set back North America's climate fight by years, with battery shortages and higher costs threatening green infrastructure. The United States' 25% tariff on light-duty vehicles from Mexico is crushing Ford, slashing its earnings by $1.5 billion and forcing price hikes on 3 models. China's 145% retaliatory tariff has killed Ford's exports, while Canada's plants face shutdowns. The hidden disaster: electric vehicles are stalling, threatening climate goals. This isn't just a trade war, it's a reckoning for global manufacturing. Smash that like button to crush the YouTube algorithm. Ford's finances are bleeding. First quarter 2025 net income crashed to $473 million, down 65% from $1.3 billion last year. Revenue fell 5% to $46 billion, and Ford stock dropped over 2% after hours. General Motors is reeling too, scrapping its 2025 forecast and halting a $4 billion stock buyback. Trump's 25% tariff and China's 145% retaliation have obliterated financial planning, leaving automakers scrambling in a chaotic trade landscape. The United States' economic nationalism is backfiring. The tariffs aim to revive domestic jobs, but global auto supply chains, banning dozens of countries, are buckling. Stellantis is shifting truck production from Mexico to the United States to dodge penalties, but Ford warns retooling takes years and billions. In Canada, General Motors' Ingersoll, Ontario plant faces production halts within weeks. Union Chair Mike Vanacle predicts operations could stop in days, threatening thousands of jobs in Windsor and Etobicoke as tariffs destabilize North America's auto hub. Labor is fracturing. The United Auto Workers in the United States, led by President Shawn Fain, backs the tariffs, citing closed plants like Lordstown, Ohio. But Canadian unions, part of the Canadian Vehicle Manufacturers Association with Ford and Stellantis, slam them, fearing mass layoffs. This rift shatters decades of labor unity as United States and Canadian workers fight for survival under clashing national policies. The United States Mexico-Canada agreement, meant to unify trade, is crumbling as tariffs pit allies against each other. The electric vehicle crisis is the real shocker. Ford and General Motors bet big on electric platforms, but tariffs threaten Asia-sourced batteries, chips, and motors. China's 145% tariff and potential United States trade barriers could delay launches and spike costs, slowing electric vehicle adoption. A one-year delay in North American electric vehicle production could keep millions of gas cars on roads, derailing climate targets. Battery plants in Canada and Mexico are pausing investments, and charging infrastructure projects are stalling, threatening green energy plans. Suppliers are in panic mode. Canadian and Mexican firms, critical for electric vehicle parts, face slashed orders through 2025's third quarter. Narrow margins mean they can't absorb disruptions, signaling a broader industry contraction. Ford's price hikes on Mexico-made models and halted China exports are survival moves, but they're losing ground to competitors. Toyota and Honda, while stable for now, warn of a fluid crisis as the Canadian Vehicle Manufacturers Association pleads for trade stability to save jobs. The United States economy, shrinking 0.3% in 2025's first quarter, is reeling from Trump's tariffs. Ford's $1.5 billion profit cut and General Motors' delayed investor calls show the industry's in freefall. Auto stocks are tanking, with investors fleeing uncertainty. The 25% tariff was meant to protect United States manufacturing, but it's raising consumer prices, lengthening delivery times, and shrinking affordable electric vehicle options, hitting wallets and climate hopes alike. The climate fallout is dire. Electric vehicles are central to emissions cuts, but tariff tariff-driven supply chain chaos threatens progress, a luxury. Only electric vehicle market could emerge, pricing out middle-income buyers and undermining United States and Canadian tax credits. Every delayed battery facility or canceled electric vehicle launch adds to greenhouse gas emissions, pushing decarbonization timelines back years. Trade policy is now environmental policy, and Trump's tariffs are unintentionally sabotaging North America's green future. Ford's trapped in a global clash. Economic nationalism demands United States production, but modern autos rely on international parts. Reversing decades of globalization is costly. Stellantis' production shift proves it. Ford's halted China exports, critical for revenue, and Mexico price hikes are short-term fixes, but long-term competitiveness is at risk. The United States. Mexico-Canada agreement spirit is fading as Canada's auto sector braces for collapse and Mexico's suppliers face losses. This is bigger than Ford, it's a warning for the world. Global supply chains built for speed now face political volatility. Workers in Ontario and Ohio face job threats, while consumers see rising car prices and fewer electric vehicle choices. Governments pushing national interests risk fragmenting trade pacts like the United States, Mexico-Canada agreement. The rift between United States and Canadian unions shows labor's unity cracking under tariff pressure as automakers like Ford navigate an impossible balancing act. The future hangs in the balance. Can Ford retool without pricing out buyers? Can climate goals survive trade wars? Trump's tariffs, meant to save United States jobs, are raising costs and delaying innovation. Policymakers must align trade and environmental goals or risk a fragmented economy. Ford's struggle is a mirror for global industry, interconnected, fragile, and under siege. The next months will shape not just cars, but how nations build cleaner, fairer economies. Share your thoughts below, hit like, and subscribe to track this auto industry meltdown.